Something massive just happened, and if you are retired or getting close to retirement, you need to stop what you are doing right now and watch this entire video, because what we are about to share with you could save you hundreds, possibly even thousands of dollars every single year. We are talking about real bills, the kind that show up in your mailbox every month. Bills that millions of seniors across this country are paying right now without realizing they may not legally have to pay them at all. Federal rules, IRS guidelines, and government regulations that most financial advisors never mention. Rules that could apply directly to you, your household, your social security check, and your retirement savings. And here is what makes this even more urgent. Most retirees have no idea these exemptions exist. We are going to walk through 5 specific bills that seniors and retirees may be legally exempt from paying, backed by real federal rules and IRS guidelines. We will explain exactly who qualifies, how the process works, what mistakes to avoid, and what steps you should take before the end of this year to make sure you are not leaving money on the table. Stay with us all the way to the end, because the 5th one on this list is the one that surprises people the most, and it could be the biggest financial relief of your retirement. Federal income tax on a portion of your Social Security benefits. Now, most people know that Social Security can be taxed, but what they do not know is that depending on your total income, you may qualify to have a significant portion of those benefits completely exempt from federal taxation. The IRS uses what is called your combined income to determine how much of your Social Security is taxable. Combined income includes your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefits. Here is the key number you need to know. If your combined income falls below $25,000 as a single filer, or below $32,000 as a married couple filing jointly, then not one single penny of your Social Security benefits is subject to federal income tax. 0. And yet millions of seniors are either overpaying their taxes voluntarily or having unnecessary withholdings taken out of their Social Security checks every month because nobody ever sat down and walked them through this calculation. If you had taxes withheld from your Social Security last year, you need to pull out your tax return right now and check whether you even owed those taxes. You may be entitled to a refund you never claimed. If your income is slightly above those thresholds, the maximum amount of your Social Security that can be taxed is 85%. That means at least 15% of what you receive from Social Security is always off limits to the IRS, no matter what. And many states go even further. Right now, more than 40 states either completely exempt Social Security income from state income taxes or offer significant deductions for retirees. If you are living in one of those states and still paying state tax on your Social Security, you are overpaying, and that is money you are never going to get back unless you act. Now let us talk about the second bill on this list, and this one involves something called Required Minimum Distributions, or RMDs. If you have a traditional IRA, a 401k, or a similar retirement account, you already know the government requires you to start taking money out at a certain age. And yes, that money is generally taxable. But here is what changed recently that most people have not caught up with yet. Thanks to legislation passed in the last few years, the age at which RMDs kick in has been pushed back significantly. If you were born in 1951 or later, your RMD age is now 73. If you were born in 1960 or later, it jumps all the way to 75. That means if you turned 72 recently and started taking distributions because someone told you that you had to, you may have taken money out of your retirement account earlier than necessary, triggering a tax bill you did not need to trigger. This is a mistake that costs retirees real money every year. Knowing the correct age for your specific birth year could allow you to delay those distributions, keep that money growing inside your tax-advantaged account, and potentially reduce your taxable income by thousands of dollars for several more years. If you are unsure what your RMD age is, that is something you need to confirm with your plan administrator or a tax professional before December 31st of this year. Because once you miss a required distribution, or take one you did not need to take, you cannot undo it. If you are finding this information helpful and you want to make sure you never miss an update like this one, take 10 seconds right now to hit that like button and subscribe to this channel. We cover IRS changes, Social Security updates, Medicare rules, and retirement strategies every single week in plain, simple language, designed specifically for people who are living in retirement or getting ready to retire. Hit subscribe and turn on the notification bell so you get an alert every time we post something new. It is completely free and it could save you far more than you realise. Medicare Part B premiums. Most retirees just accept whatever premium amount Medicare sends them and pay it without question. But there is a federal program called the Medicare Savings Program, and depending on your income and assets, it could pay your Part B premium entirely on your behalf. In 2024 and into 2025, the standard Medicare Part B premium is over $170 a month per person. For a married couple, that is over $340 every single month going out the door. But if your income is at or near the program thresholds, which change slightly each year and vary by state, a government program could cover that entire cost for you. There are actually 4 different levels of Medicare savings programs, and each one covers different costs, from just the Part B premium all the way up to covering deductibles, co-insurance, and co-payments as well. Millions of seniors who qualify for this help are not enrolled simply because they never applied. The application is handled through your state's Medicaid office, and eligibility is determined by your monthly income and your resources. Many states have much more generous income and asset limits than people expect, so even if you think you earn too much to qualify, it is worth checking. If you have been paying that Part B premium every month without ever looking into this program, this could be the single most important phone call you make this year. The 4th bill on our list is property taxes. And before you click away thinking this does not apply to you, hear this out, because this is the exemption that the most seniors are completely unaware of. Every single state in America offers some form of property tax relief for senior citizens and retirees. Some states offer a flat dollar exemption off the assessed value of your home. Others offer a percentage reduction. Some programs freeze your property taxes at a certain level, so they can never go up again as long as you live in the home. And some states offer what are called circuit breaker programs, which cap your property tax bill as a percentage of your income. So if your tax burden ever exceeds a certain share of what you earn, the state steps in and covers the rest. The problem is that almost none of these programs are automatic. You have to apply for them. And in most counties there is a deadline, often in the spring, to file your application for the current tax year. If you miss that deadline, you typically have to wait a full year for the next opportunity. Seniors who own their homes and have lived there for years are sometimes paying full property taxes when they could have had a dramatically reduced bill simply by filling out a form. Contact your county assessor's office or your local area agency on aging and ask specifically about senior property tax exemptions, homestead exemptions, and tax-freeze programs. And now we have reached the 5th bill on our list, the one that generates the most surprise and the most relief when seniors find out about it. And that is certain types of medical debt and out-of-pocket healthcare costs. Hospitals that receive federal funding, which is the vast majority of hospitals in this country, are required under federal rules to offer financial assistance programs to patients who cannot afford to pay their bills. These programs, sometimes called charity care, sometimes called financial hardship assistance, can reduce your hospital bill dramatically or eliminate it entirely based on your income. For seniors on fixed incomes, Social Security, or modest retirement savings, there is a very real possibility that a large portion of your medical bills from the past year could have been reduced or forgiven if you had applied for these programs. In addition, certain medical expenses that you do pay out of pocket may be deductible on your federal tax return if they exceed a specific threshold of your adjusted gross income. For taxpayers aged 65 and older, this deduction can be particularly valuable when combined with the higher standard deduction available to seniors. The point is this: do not assume that the number on a hospital bill is the number you have to pay. You have spent your entire life working hard, paying taxes, following the rules, and doing the right thing. You have earned your retirement, but the system is not set up to automatically give you every benefit and exemption you qualify for. It requires you to know the rules, ask the right questions, and take action. Federal income tax exemptions on Social Security, delayed RMDs that protect your retirement savings, Medicare premium assistance programs, senior property tax exemptions, medical debt relief and healthcare cost deductions. Every one of these is real, every one of them is available, and every one of them requires you to take a step to claim what is yours. This is exactly why staying informed is one of the most important things you can do for your financial health in retirement. The rules change, the thresholds change, new programs get created and existing programs get updated, and the seniors who benefit the most are the ones who are paying attention. If you are not already subscribed to this channel, please do it right now. Click that subscribe button and hit the bell icon so you never miss an update. Share this video with a spouse, a sibling, a neighbour, or a friend who is retired or getting close to retirement. You may be doing them the biggest financial favour of their lives. We are here every week with the information you need.